I diversified a lot in P2P. Maybe I would have invested close to 50 lakhs with lending. It gave me a handsome around 14-15% interest rate. Indian markets are a bit grumpy. I mean, I may park maybe 30-40% in something which is certain, and maybe 60% in something where I can take the risk.
Short-term gains or compounding over time or both?
I'm able to see like who is giving the loan, who is receiving the loan, what is the amount, what is the cycle of payment. Some ways, I think it is better than your market returns, right? In some of the mutual funds. Today, I allocate around 50-20% of my portfolio towards P2P, which may grow.
One of the biggest investment myth that you've heard of? Hello, everyone. Welcome to another podcast of Real People, Real Stories. Today, we'll talk all about financial strategies, P2P lending, and for that, please join me in welcoming Shiv Malhotra. Thank you so much for joining us, Shiv, today.
Thank you for the opportunity. In fact, great to be here and
Yeah,
talk about some of the stuff about P2P lending.
perfect. So, Shiv, let's start with a bit about yourself, what you've been doing, and where you're from.
So, born brought up in Delhi, right? So, I'm Shiv Malhotra. I did my engineering from Shimla, right? So, 4 years in the lap of mountains, right? Spent a lot of time, got a lot of time to actually prepare for competitive exams. So, cleared gate in my third year and then went to IIM Bombay, pursued my postgraduate diploma in industrial engineering, right? And then joined an investment bank, right? In their investment banking operations function.
Okay.
Spent like a couple of years there, moved the firms again, investment banking operations. Then I moved to an FMCG company as well for a couple of years, right? Before joining in the compliance department when I'm managing a large team today. So yeah,
Right.
that's a bit about me.
Brilliant. Being in the financial industry yourself, right?
Yeah.
Do you think people who are not in the industry versus those who are in the industry see the world of finance differently?
I think when you are in the industry, you know the nitty gritties, right? A bit more better.
Yeah.
Because you're more educated, you're being trained continuously, you have experiences, right? And then when you're working on a domain which is your 9 hour grind, right? You get more experienced in doing all that on a daily basis.
Right.
So I think maybe a bit more advantage, but I would not say for somebody who is really an enthusiast, because there's a lot of learning material available today.
Yeah.
Which is open source. You can log into YouTube, you can log into LinkedIn, and so today is not the world that it differentiates, right? Based on knowledge.
Right.
Knowledge is available everywhere. You just need to choose what's right for you. So that's my opinion about that.
So interesting, right? So you mentioned two different things. One, being in the financial industry, you have slightly more different type of insights than those
Yes.
probably who's not in it. But then there are a lot of knowledge, lot of things happening, be it Instagram, be it YouTube, a lot of people talking about a lot of things, right? Even LinkedIn for that matter.
Yeah.
So when you started off, because you started your journey with the financial in the financial industry, uh, what was your first investment really look like, and how did you make that decision?
So to be very honest, back in 2010, when I joined my first job, my first like a corporate salary account got opened with HDFC, right? So what happened was that as part of the whole relationship, they sold me a ULIP, right?
Okay.
So that time, and I was not very sure what the product was, and ULIP was new, right? Like in 2010 kind of a period,
Right.
New instrument. So I just invested in them, and then when after 5 years it got matured, right? Like when the maturity date comes in, I felt that I was cheated, to be
Okay.
very honest, because the kind of fees they levied on me, and it was insane, right? Like, so I think you get educated even by your investment decisions, to be very honest, right? So I think this wisdom, financial wisdom, doesn't come to everyone. It builds when you take certain decisions, and then you reflect back and see, okay, was this a right decision or was this not? But I think for me, it has gone well because I learned from those decisions and made sure that I don't repeat.
Right. So from that,
Yeah.
starting with ULIP, uh, almost 15 years now.
Yeah.
How does your diversify? How does the portfolio look like? How do you diversify it, and across which instruments?
Sure. So I invest a lot in Indian equity. I mean, big fan of Rakesh Jhunjhunwala, where he has been telling that you have to go big, right, and you have to be long on India. So I support. And it has been fruitful because the markets have done good returns over the past whatever years, right? So when I started my investment journey, like Nifty was maybe 3,000, 4,000. Right, today you see where it is.
Right.
So I think that's number one. Second is I invest a lot in foreign mutual funds, right? So a lot offbeat thematic investment, right? But I see it has paid me very well as well. Like one of the funds that I really like is HSBC Brazil fund, right? That's the only fund today available where you can invest in the markets of Brazil. Right? There are funds which are China focused. There are funds which are Europe focused. There's one Franklin Templeton fund. So I think I just see that where the opportunity is. Like for example, Brazil market for a very long time was undervalued, right? So I invested. I had invested some lump sum money, and then after the year when you see your return, it would be obviously better than wherever you invest, right? So you have to take certain decisions which are more, you can say, time sensitive, right? So and I made those thematic. Like energy at one point of time was very hot, right? So there are some good global energy funds which are out there, right? So if you don't want to, for example, invest in options like an oil option or something, a crude option and all that, then those funds come handy, right? They are diversified, though they take a bit of fees, but that's fine, right? Because they do a bit of research for you. You don't have to put your mind in finding the right opportunity. So yeah, I mean, so some of my decisions are really offbeat, but they have paid well, right? So that's the mutual fund thing. And it will be, I mean, a lot of people surprised by looking at my portfolio because maybe I buy something today and maybe sell after 3 days, right? Because suppose, and I'll give an example, right? So I bought a reality fund, right, mutual fund. It was an NFO, and I saw after the week, like it gave me 7% returns, right? So I thought it's a great opportunity to just sell off, right? Like who in a week will give you 7% return, right? So, and it's like quick money, right? I mean, on a lakh rupees, if you are earning 7,000, that's your pocket money
in 7 days.
Yeah, in 7 days, right? Oh. So, and I'm telling you, these are real examples. I mean, I can give you numbers, right? Similarly, there was one defense fund which just got launched. I think Motilal Oswal launched it. In 10 days, it gave me some 4-5% good return. So yeah, I just like made money, right? Like, so some of the investment decisions are short term, very, very short term. Some of the investment decisions are very long term, right? Like, and some of the decisions are like maybe wrong decisions, right? But you keep living on it. Like for example, some of the small cap funds which I invested in them for like maybe 2-3 years, and after that they did not give me anything, right? So I think it's a mixed bag. I would say it's not that always it will be perfect, but I will say even if your hit rate is like 40-50%, I think you're good.
Right.
So that's how I look at it.
But you do agree that diversification
Yes,
is
definitely.
important.
So I diversified a lot in P2B, right? So if you see my portfolio, maybe I would have invested close to 50 lakhs with Lending, right? I mean, this is only on the lump sum amount.
Right.
I also invested in your previous lump sum plan, right? That
FMPP.
Runs. Yeah. So, and that gave me close to 12 to 15% good returns. Like, I mean, I invested in your 12-month plan, 9-month plan, 18-month plan, right? So, there also I diversified with the time periods, right? Because, and I see a bit of difference in the returns coming in. So, yeah. And the recent one just matured like a month back, right? So, but yeah, I mean, being 3 years with the platform, so where I invest in Lending is, so for example, a time like today, right? Indian markets are a bit grumpy, right? So you know that maybe next 6 months you may not get the kind of returns with whatever is happening with India-US relations, whatever is happening with whatever duties are being put into it. So is it wise to put in Indian market? Maybe no, right? So why not maybe get some money out from there and put it here? So it's like, as I said, right? Investment decisions, you cannot time the markets, but at least you know where the direction is going, right? So at least you should be sensible enough to maybe diversify a bit based on those decisions.
Right. So today, when you mentioned that there are certain decisions you take which are short term, very, very short term. Some decisions are long term. When you're making any decision today, do you have a number that do you have a fire number for yourself that and a retirement number that I'll retire at this age, I want to achieve this kind of surplus, and for that, this is how I'm going to plan my investment strategies.
So see, I mean, I look at it from two angles, right? One is who are my dependents, right? So I have a daughter who is 3 years old, right? So I think a lot about, suppose 20 years from now, right? What would be her requirements? So obviously I cannot plan for 20 years, right? But at least directionally you start putting some money somewhere so that it grows and it helps her, right? So I would say that, I mean, you can plan certain things, right? But there are a lot of factors and a lot of coordinates which are not in your control, right? So I would say people who say that, yeah, in 10 years I want to make 4 CR by doing an SIP of X, I think those are all mathematical models, right? As good as mathematical models, right? I would say that, I mean, I may park maybe 30-40% in something which is certain, and maybe 60% in something where I can take the risk. Okay. Or maybe, I mean, and I mean, uncertainty grows with how the market reacts, right? So, so maybe at certain point of time, I'm 100% bullish on Indian market, and at certain point of time, I may not be, right? So, for example, I may have taken an investment decision that I may park this money for X number of years, but when the market corrects from 26,000 to 22,000, right? That's where maybe at 25,000 you have to make a decision that I don't think this will go downhill, right? So maybe make some money at 25,000, right? And then let it correct to 22,000, put some money back when it is 22,000, right? So that in the process you make money as well. So I would say that, I mean, though you can have a long-term view, but a lot of these investment decisions are more periodic as well, right? Correct. So I think if you say what's the right thing to do, I don't think. I think it changes by the day and the week.
Right.
So
has there been anyone early in your career who actually a mentor or somebody who influenced your decisions or who guided or kind of told you this is the process of making money or investing, a philosophy that you built over time?
So I think I remember when I was in IIM Bombay. Now, I mean, earlier it was called NEETI. We had a course called Financial Engineering. Okay, right. It was a part of my industrial engineering course, and there the first page, first chapter was time value of money, right? Where you build on like how the money grows, right? What are the percentages? What is your NPV? What is your return on investment, right? In MBA, you learn the cost of acquisition of fund, then your return on investments on how to, so NPVs and all these mathematical models. So I think it's more on formal education. I would credit that than maybe Instagram videos, right? Because a lot of people today take a lot of decisions just by looking at a 2-minute video. I don't think that's the right way to invest, because you need to have a perspective before you put your hard-earned money, right? Like you slog 9-10 hours in office, so and you earn, right? So I don't think you should make your decisions based on that. I think maybe either go via investment advisors, right? I mean, if you're not really educated, because a lot of, I mean, I was reading a report where a lot of people lose their money in FNOs, right, in India. And there are foreign firms who are actually earning out of it because they know people want to make quick money, right? So to be very honest, I have never put a single penny in FNOs. Right? And that's based on a decision that I will not, though I've lost a bit of money in stock trading early in my life, because I mean, warm blood, right? You start thinking that, but those were like initial mistakes, right? But then you learn and then you correct. So
that was actually going to be my next question. So realizing you take P2P lending as an asset class, right? And you mentioned a couple of other things also. I'm assuming that you have moderate to high risk taking capability right now, correct? Now, with that comes a time where because it's an emotional roller coaster, right? There are times when you feel like, oh, there's a news, maybe I should take this action. Oh, things are doing really good, maybe I'll wait and let it go a little more further. How do you control your emotions when a lot of things are happening and one single news or an event can actually manipulate how the mark goes up or down, and how do you decide at that point in time?
I think this is more based on your rational thinking, right? So, I mean, these are not impromptu decisions, right, that I take. So maybe I will have some calculations at back of my head, right? And being in finance, you do all those bit of homework before you take certain actions. So these are not like instant actions that today I sell, tomorrow I buy. Not like those kind of actions. It is more like okay, directionally this will go. Like I mean, today if you see the markets, right? I mean, in my view, maybe they may correct 5 to 10% from here because of the ongoing volatility, and then they may come back, right? So, I mean, if you have something put in where you are already sitting on a profit, right? So I will decide that, yeah, I mean, let's park that profit, right? And then let the market correct for 5, 10, 7%, and then buy when it corrects, right? So that you again enter the market when and you make again some money, right? So I think it is more like directional and it's more data driven, in fact, right? Because when market, I mean, if you see the market, it has been growing for nearly 3 years now, right? I mean, though it has been correcting, but it's not really correction, right? Those are like bumps. The market has not corrected for 2 to 3 years, in fact, right? So maybe this is the time when maybe it's the big cut comes, right? So yeah, I mean, some logical, rational thinking, and see, people use algorithms. There's a lot of algorithmic trading happening. There's a lot of models which are being built. People have their investment philosophies. Generally, I go with data, right, and then I go with my thesis, right, because this is my money, and I am from the financial industry, so can put some hypothesis, can have some assumptions, and then yeah, I mean, I have my calculations to make decisions. Right.
So, what you're technically saying is that it's not the emotions, but
it's like pure fact-based, data-driven decision. Right? It's like if you see maybe past 1 month, 2 months, 3 months, right, how the market has been, right? So it is not growing and it is not shrinking as well, right? So there has to be a trigger where it goes either way, right? Because the nature of the market is to either go up or down, right? It can't stay stable.
Correct.
So, and I think this may be the trigger, right? And then, or it could be other way as well, right? So that's what the market is, right? Like for example, in India plays this game so well, right, that it diversifies with Russia and China and all that, and then maybe something else happens, right? You don't know, right? But at least you have the profit in your hand, no?
Correct.
Even if it goes up from here, you don't lose something. Correct. Right? You have already booked something, right? So, I mean, you have to have that risk and reward, right? So what I'm saying is, if you already made money, yeah, I mean, make some money and then wait.
Right. So very interesting. Now, the fact is that peer-to-peer lending is emerging as an industry once again, and it kind of promises high yield in a very short period of time. So, how did you discover peer-to-peer lending, and what made you make the choice to actually move forward with it?
Okay. So I think I was paying my credit card bills through credit, right?
Okay.
And then, I mean, while using the product, right, when you're exploring an app, that's where I think credit came up with this 9% plan, right? So I had some money. I thought, let me try out. I mean, put some money there. Let me see whether they are able to give me 9%.
Right.
And it was a long-term plan. They had 3 months that time, 6 months, 9 months, and 12 months. I think those were the kind of plans they had. And then I invested some money, tried my hand out, and felt genuine, to be very honest, right? And that's why I like understood, yeah, there is something called P2P, right? It was back in 2019-20, I think, where I started that investment, and that's where evinced a bit of more interest, researched a bit more, right, and then invested in a couple of platforms, in fact, right, like invested in Univest. I think they had a partnership with Faircent.
Yes.
Then I discovered Lending during that period of time because I was doing the research and found one of the credible partners is Lending. So started with your FMPP plan. Initially, if you see my portfolio, I invested like 1,30,000. I had some spare money. I thought, let me see how this works out, right? So generally, I mean, I invest in these platforms where I know that okay, even if I lose some of this, I mean, it's fine, right? Like you have to have that mindset while it's more of an exploring journey, right? Like you don't know what you are getting into. You don't know means like you don't know who is the borrower, right?
Right.
Like, I mean, you know that you are doing P2P, but you don't know, right? Like, who is the borrower, right? So, and it's very, very app dependent, right? Like, I mean, all these investment decisions you are taking, I mean, you are building the credit history, right? What is your algorithm on building the credit history? What statements are you checking, right? How much deep analysis do you have while giving their credit score, right? Like, for example, if you mark somebody a 750, right, with CIBIL, will they be a 750 or a 650, right? So that's a question that I had, right? Very,
Yes.
I mean, like the credibility, it's more around trust and more around credibility. But I thought, I mean, with AI and with a lot of data driven thing, and I mean, Indian tech being good, generally good. So let me see how this platform is working, right? And when my first investment matured with Lending, I think it gave me like handsome around 14-15% interest rate, which made my belief a bit more strong, right? See, what happens is it's based on your payouts. Right?
Yes.
So the when you receive those payouts and those are consistent and they are result oriented, I think that's where the trust builds in, right?
Right.
So it's both with the borrower and with the lender, right? So if the borrower wants a loan again, right? So if you're able to provide, the borrower has a trust with you,
Right.
if a lender is receiving those payouts, right, on a consistent basis, and uh, and we know that it's a fair, right, fair calculation. There's no reconciliation mistakes, right? The accounting is proper, right? Uh, I mean, there is transparency in the whole chain of events, end to end. I'm able to see like who is giving the loan, who is receiving the loan, what is the amount, what is the cycle of payment, right? So I think when you look at the end to end picture and you are able to connect the dots, I think that's where the trust builds in.
Correct.
Right, with the platform. So I think being with you for 3 years, I mean, have seen average returns of around 15, like 12 to 15%, right? And like 12 to 15%, I'm saying, even in some like 7 month plans, I receive like 15% sometimes, right? So
Yes.
it actually makes it much more sweeter, right? When you look at the overall deal.
Correct.
And in some ways, I think it is better than your market returns, right? In some of the mutual funds. So yeah, I mean, those are the perks, right, that I see of putting some money with P2P, right? I mean, obviously, today I allocate around 50 to 20% of my portfolio towards P2P, which may grow, right, based on how again Indian markets are working, and then maybe put some money from there to here, right? Because I mean, I've seen consistent returns, things are working well, so why not put a allocation which is better than today?
So interesting. Now, what you said, you of course have earned good returns, but peer-to-peer lending, while it comes with its higher potential to give you an yield, it also comes with its own set of default risk, correct?
Yeah.
And you also mentioned that you are giving money to somebody who you don't even know. So how do you trust? So then you start trusting, okay, the platform which is vetting the borrower with all the data points is doing it right, correct? Now, from your point of view, how do you vet a borrower? Do you have a specific strategy that you follow, or do you diversify across set of borrowers, or do you have strict guidelines that okay, I want to fund only these type of borrowers?
So to be very honest, I don't have time to look at the borrower list.
Okay.
Right. And I invest generally lump sums, right? So if you see my investments, maybe I'll invest 2 lakhs, right? Lump sum. Now, and if you're investing 2 lakhs in lump sum, which means that you will have 250 people receiving that loan, right? Virtually impossible with a 9-10 hour grind in jobs that you can filter out what you want, right? So I believe in one thing, right? So there may be 10% default, right? Like in 250 borrowers, maybe 25 don't pay up, right? Or maybe pay partial, right? Or uh, maybe pay partial, and then the kind of returns may not match up. But if 90% pay up, right, my target or goal of that 12 to 15% is met.
Right.
So my expectation with the platform is that, for example, right, my expectation is not 25%, right? My expectation is 15%, because at least from past 3-4 years, that's what I have been receiving, right? So I know that okay, 12 to 15% is the expectation that I will get, right? And if by not putting my mind into selecting each borrower, if I'm able to achieve, I don't think I should put my energy into something that I am, again, I may make mistakes, right? Like, I mean, even selecting the borrowers, I may have certain philosophy and I may be wrong, right? So I don't think so that I should put my energy into something which you have a better technology and a team to actually manage that. For example, right. I don't have a team, right, to manage this. You have a team. You are taking certain decisions. You are obviously working in the background. You have an army of people looking at these things on a daily basis, right? And I should trust that. I mean, that's how it should. That's how it should be designed.
Correct. Now that P2P lending is again growing in India, and you also mentioned a lot of short-term strategies around it that you have seen working for you. Do you see it as a short-term tactical strategy to earn returns, or do you see it as a long-term part of your portfolio, which will really become?
So to be very honest, I'll tell my experience, right? So I had one fund of 18, I think 15 months or something.
Yeah.
I think FMPP, you had a product where you were giving an option to invest for 15 months.
Right.
I think there I got a return of around 16%, right, overall. And I invested the same money in your 5-month product and 7-month product, and I'm getting the same amount of money. And this is very honest, this is like the facts, right? So I think that, I mean, why to park money for 15 months when you can get almost the same return in a 5-month or a 7-month plan, right? So I think the shorter the better, to be very honest, right? Because
compounded over long term.
Compounded, yeah. I mean, like, if I put the same money, like this 5 months over the period, I mean, 3 times I invest the same money, I mean, it will compound, right?
Yes.
So I think maybe like a very long-term thing has not worked for me, to be very honest. I mean, based on my experience, because I've invested in 15%, I mean, this 15-month plan, and it did not turn out to be, like, for example, if I'm earning 12 to 15% in a 5-month plan, then I should expect a 3x at least return for a 15-month plan.
Right.
But I have not seen 36% returns, right, for 15 months. So I would say that this is a sweet spot. 5 to 7 months, 6 months is a sweet spot, because your investment matures in 6 months, right? Every month you are getting a payout. Every, like, start of the month you are getting a big payout, right? I think it overall sweetens the deal, is what I feel.
One of the struggles we have in showing returns, because a lot of people know two parts of it. One, what is my absolute return, simple interest that I'm earning? I put 100 rupees, I have earned 10 rupees, so my return is 10 rupees for the time period. Let's say 3 months, so 3 months I have earned 10 rupees. Now, then how, because borrower pays an annual interest, right? तो जब आप इन्वेस्ट कर रहे हो तो हम दिखाते हैं कि आपको इतना परसेंट borrower से annually मिलने वाला है. So then there was a disconnect that, okay, I am putting in X percentage, but I'm getting Y percentage, it's less than the X percentage. So how do I know what happened, right? So we started showing annualized net returns. Okay. And then we realized that a lot of people don't understand annualized net returns very well. So we thought, let's try XIRR, because XIRR is a very well-known general term of calculating your inflow and outflow. When we went to calculate XIRR, we realized there's some people whose XIRR is going into thousands of percentage, lakhs of percentage, because the cash flow is happening at such a rapid rate. There are a lot of people who put payback, borrowers payback within 15 days, 10 days time period. And I mean, we could not calculate XIRR for a portfolio like this. And in the earlier FMPP option, you used to get the entire money at the end of the entire tenure. Now we have realized that people are getting money almost every day in their account, depending on, of course, the size of their portfolio, which in turns become like cash flow becomes really a factor to actually see, okay, I am getting this inflow almost every day. So I'm sure it's happening with you as well. So what do you do after that? Like, do you wait for some time to reinvest, or what is your strategy once
I think it depends on where I am today.
Okay.
Right? So for example, if I have certain expenses come up, right, then I will do that. Or maybe an opportunity in the market which is better than, right, P2P. Like, for example, if I'm getting a payout when market is at 22,000, right, maybe better to park some money there, because you know that it may turn back.
Makes
so,
sense.
So again, it's very situational, right? And it's very, very, I mean, again, a data-driven decision, right? Like, I mean, I know that maybe 12 to 15% is I will receive here. But for example, if I invest in a corrected market,
yes,
right, or something which is, I mean, something which has come up and it really clicked me, So one of the funds, and there's a real example, right? So there's a fund called Internet Economy Fund.
Okay.
It has just come, right? So one of the indexes which has just come, where there are companies like Zomatos and Swiggy's and Naukri.coms and all the e companies, right, which are based where the business model is more on the an app or a website. So I thought maybe at that point of time you can make some quick money there, right? And in fact I made as well, right? So parked some money there, right? Again, same cycle. In 10 days, the fund was up 7%, because the whole Zomato thing, I mean, if you know, it just quickly went up, right?
Yeah.
So I made a bit of money and then exited, right? So I think depends on where you are, what you are doing. So I take those decisions, and these are like you have to spend time, right? I mean, it's more on your research. It's more on like, and it may falter, right? I'm not saying that these things will click always. It may falter. In a growing market, everybody wins, but when it falls, everybody crashes, right?
Yes.
So fortunately, it does not happen in Indian market for quite some time,
Yes.
and that's why you see a lot of people made their careers out of stock market, right? But I mean, this is not long term, right? Everybody knows, right? This is like a short term opportunity that everybody is
just like
cashing.
crypto have.
Yes, I mean, yeah.
Yeah. Okay. Great. So initially, when you were researching and you mentioned that you saw that P2P lending is a thing, uh, a lot of time, because outside of India, a lot of these markets did not really work in terms when it comes to P2P lending. So, was there a question? Was there a doubt before you decided to put the money forward? Did it feel like a scam of some sort? Because again, you giving money to random strangers, you don't even know them. What was your thought process when you entered in?
So I think it's more around formalization of the idea.
Okay.
Right. See, in big markets, the dynamics are different, right? Like in US kind of market, you get mortgage at 4%, right? I mean, there the game is completely different, right? I remember in COVID we had negative interest being paid by European banks, which means that you park your money in a bank and bank charges you because you parked your money, right? So I mean, you can't compare the dynamics of Europe and Americas to what we are doing in India, right? It's a high interest economy. Here people have an ambition, right? They want to grow, right? And there are like 140 crore people, right? So it means 140 crore ambitions, right? And so who will fund them? So I think you cannot compare by the size, by the ambition, by where the country is. It's a developing country, so everybody needs money to fund, right? Like even if you ask a street hawker, right, what do they want to do? They want to grow their business. How? They want more money. Right? So um, I think it's an idea that everybody wants to grow, and there may be 10% people who may be not genuine. And as I said, right, you have to play that, and that's exactly the risk that you carry in this thing, right? That maybe in 100 borrowers, there are 10 borrowers who have a false ambition, or just playing the game, or who say that, okay, I will take this one time and then run away. Yeah, very much feasible, right? Like somebody takes the money, borrow the money, and runs away, right? You can't, like your collection teams can only do so much, right? I mean, there are limitations,
Yes.
which I understand, right? But if that 90% pays you, I mean, at the percentage that you have kept, which is 40, 42, 46, 48, I mean, if that's the real percentages that you really charge them, then it averages out, right? And that's what is that 12 to 15%, right? With all your fees and all cut, right? I mean,
Right.
So I think, I mean, even if you were making 15% in a market like this, right, where your FD is giving 3 to 4%, 5%, 6%, yeah, I mean, it's a great deal, right? I mean, you don't have, so the best thing is I don't have to spend my mind, right? Just choose lump sum, select all the loans, done. To be very honest, that's what I do, right? It's maybe a 15-second decision, right?
Yes.
I don't unselect anybody in the list that you present to me. Maybe I'm doing a fallacy thing, right? Maybe you are right? But I mean, that's how it is, because it's more on probability, right? It's more a game of who will pay, who will not pay, and I don't know, right? I mean, whatever information that you present, do you think I'll be able to make that decision in half an hour? I don't think so. Maybe there are some genuine people who are not able to pay, and there are some really bad people who may pay up. I don't know, right?
Right.
But if my average is, I mean, my goal of 12 to 15% is met,
Correct.
that's it. I mean, that's my goal, right, with you, and that's the expectation. Till the time that expectation is met, that trust is not broken, that consistency is there. Yeah, I mean, I think makes sense. That's what I believe. That is what I think, and that's how I take decisions. And I may be completely wrong, right? So,
But I think the ultimate bottom line is you diversify as much as you
yes,
possibly can,
yes,
right? And
yes.
you do all your maths. Correct.
Yeah. I mean, bottom line is that percentage,
Yes.
right? Are you able to make better than market? Are you able to make? I mean, are you able to diversify into something which is a credible option? Are you able to diversify into something which is giving you consistent returns? I think the word here is consistent.
Correct.
Markets will not, right? 1 year they may give, 2 years they may not, or 2 3 years they may give, 2 years they may not,
Right.
right? But yeah, so that's the whole story.
So, as an investor, and one of the very best investors also make their own set of mistakes. In your journey so far, what do you think was that one mistake that you made that taught you a big lesson in terms of financials, and one win that you kind of achieved, which again taught you a good lesson as well?
So bad investment, right? Like I thought that some of these companies who have gone bankrupt, right? They may come up, right?
Okay.
So invested in, like, for example, companies like JP Infra, right? Invested in companies like Artec Limited, right? So I mean, when these are rock bottom prices, right? They feel, you feel that let's invest in them. Maybe this will correct. There's no way this will correct from there. Something like a Vodafone, right? Invested a bit of money, right? But what happens is when something is downhill, right? I mean, I learned that it will go downhill. There is no force in the world which will make it work, right? I mean, like, read the stories of Vodafone, read what has happened to JP Infra, right? So Artec, right? So invested, like, lost some money. That's a lesson, right? That you, like, a sliding knife will bite you, basically, right? It will. So please don't. I mean, like, it's a sliding hill.
Right.
Please don't ride on that, right? So that's a lesson that I learned hard way. Lost a bit of money in those investments, and then decided that I will never, right? So what I used to do is I used to scan and see, okay, which is the company which has lost a lot of, like, lost the maximum in the market, right? From the issue price or whatever, like maybe in the last 3 years, which is the company which has lost 90% of its value, right? And I see, okay, some names crop up, and then I say, okay, out of these 5 names, maybe this, I think this company will survive, right, and will go up from there, right? And then you realize after 6 months it has actually corrected 50% more. So I think those are some of the things that we should not do, right? And this is a lesson learned hard way, but that's how it is, right? One of the best decisions is that I started uh, investing in mutual funds on a short-term basis, right? Okay. So again, if it's a growing market, right, there are certain things, there are certain themes, and in the Indian market, like, there are good number of themes which give you good money. Like tourism is one theme, right? I mean, there are funds around tourism, right? So if you go to, there's an index on tourism today, right? And I made some good money on that, right? So I think playing on certain themes has really helped me understand a market bit more. It's more interesting, and then you make a bit of money on that, right? So yeah, so maybe see, it turns out to be bad decision, right? But ultimately India is a growing economy, right? So I mean, people will go out, people will spend money on tourism. Correct. People would like to stay in better hotels. People would like to take better transport, like flights and stuff like that, right? And that's where you see shares of Indigo, IHCL, right, likes of ITC who are into hotels, right, going, right? Yeah. Because Leela, right, some of those brands. So what I'm saying is, so again, it's more directional, it's more story, right? That how you weave a story, and are there any themes out there which will make you money, right? I think it's more on thematic things. I think till now my hit rate is close to 70-80%.
Nice.
Which is I think a good enough number for me to be profitable on the themes.
Correct.
Right? Like I think energy was a theme, right? Um, similarly, consumer was a theme, right? There are a lot of consumer funds out there, right? You see their last 3 years trajectory, none has corrected. Right? They're just grown because there are 140 consumers, 140 crore consumers, right? They will consume, and there are consumption funds, right? So there are stories out. So you need to see what works for you. So yeah, one bad and one good. This is what I'll put.
So, do you invest in stocks as well in the long term, or like
I don't invest in stocks.
you don't
now
invest in stocks
because I'm poor. I have realized that I'm poor in selecting stocks.
Okay.
Right. So best kept with people who have professional teams,
Right.
and who can do those analysis. And go by mutual funds because again, right, same strategy as you use in P2P, right? That you diversify. So if you put my money to 200 people, right, and then 20 don't pay up, at least 180 pay up. Similar thing with a mutual fund, right? So they invest in 50 companies, right? Maybe 10 don't work or 15 don't work, but
Right.
if other 35 hit, right? Yeah, you will be profitable, right? So, and maybe the returns may be low, right? But now I have realized that I don't want to run behind those mad returns, right? Because you will never get them.
Correct.
So, and when the market corrects, you feel like my portfolio is the only portfolio which is correcting, right? That's the feeling that you correct. So generally I don't invest in stocks.
Okay.
Right? I generally, as I said, I am more a person who is more into thematic analysis, invest in themes, right? Maybe in small term gain some money. In long term, maybe good money, right? Like Nasdaq. So a lot of people invest in US equity through Nasdaq, and I'm saying that a lot of people have earned a lot of money because of this Nvidia thing and Microsoft thing and Amazon thing and FANG thing and all, right? So yeah, made a lot of money through there as well, but it's a theme, right? So you need to see, like AI is the theme right now.
Yes.
Right? So are there any companies out there who are investing in AI, and is there maybe an ETF or a mutual fund which is very similar to, which is catering to that?
Correct.
Maybe I'll put my money there rather than maybe just putting one, because see, the policies change very frequent. Today is a very uncertain environment, right? Like policies change like in 10 days. With Trump being in power, you don't know, right, what his next statement will be and then what will change.
Correct.
In that kind of uncertain scenarios, I don't think you should put your eggs in one basket.
Mostly.
So you need to, so mutual funds and ETFs are a good way to diversify, right? Generally, I feel ETFs are a bit cumbersome because they're traded like a stock. So you have to put limits, stuff like that.
Yes.
Right? I don't have, again, time to do all that, right? So it's like lump sum, put in a mutual fund, right? Preferably an NFO, right? When you get the units, and there's no meaning of investing in an NFO. It's just that, and this is my belief again, right? When there's an NFO, there will be a new team behind it, so a bit more energy in selecting the stocks and all that.
Right.
There's nothing to do with the pricing, right? So a lot of people go that, okay, it's a 10 rupees, so we should invest. No, that's not my funda. I think if it's an NFO, somebody is launching something, a new product, then there may be a team behind it which will at least for some time be focused in selecting the funds, right? So I think that's the whole pedagogy I have when I invest.
Okay. So tell me, what is the most absurd financial advice anyone has ever told you?
I think the most absurd thing which is happening in India is a lot of people park their money in FDs, right, or maybe fixed deposits. So banks, that's the job of a bank, right, to attract you to invest into something which is non-value added. Right? So in a market like India, where you have an inflation of 5 to 6%, and you are paying an FD rate of 5.1% of, a max of 6-7%, right? It is not even covering your inflation, right? Which means that your money is actually not working for you, right? And if you ask anybody, they will have an FD, right? Like even with the most astute investors, they will have some money parked in FDs, right? So, and I learned this from my elders, right? That because everybody wants to play safe in India, right? Now, I mean, the Gen Z and others, I mean, the risk taking ability has improved. But if you see our parents, our grandparents, right? I mean, that's how the structure has been, financial structure has been, right? So I believe that there's a lot of value which is untapped, right, in that money. I won't say that put everything in P2P or stock market or something, but at least like you can start diversifying, right? Like I mean, maybe 10 to 15% of the money can be diversified into other instruments.
Correct.
Right? And then when there are people who are fans of everything, like when the market corrects, I mean, the first reactions you will get is, see, I mean, this is the safe money, right? Told you that this is how it works. So, but I still feel that there's a lot of bandwidth for India to grow. Right? I mean, we're still developing, right? Another run up of maybe 10 to 20 years, like good 10 to 20 years when we reach a point when we become a bit of more developed, right? So I think it's again going back to Rakesh Jhunjhunwala. It's a long story, right? Like I mean, you have to fill it and forget it types, right? So, and if you are putting in blue chips, if you're putting your money in right pockets, I think if you're putting your money in the right opportunities, right, with the right like mindset, right, that why are you making that investment? What is your goal, right? Like I mean, if I'm putting some money, what is my goal? Why I'm putting this money? I think am I expecting 300% output or 30% output, right? So it should be realistic. What happens is either people look for 300% or 3%. The problem is there is no middle ground, right? So I think people have to have that middle ground that okay, I mean, 15 to 20% is good return, right? Like I mean, it beats inflation, right? It takes care of a lot of your pocket money. It takes care of a lot of things. For example, which are your goals, right? If you put the right amounts in right pockets, right? So, and you don't have to look at your portfolios every day, right? Again, that's something that I've learned, and a lot of people have a habit of looking at it every day. Maybe a week would be a right frequency, or a month would be right frequency, given how much time you have, obviously, right? So don't make haste decisions. Right now, I mean, if you see IT companies are beaten up, right? I think it's a good opportunity for somebody to enter, right? So that's how I look at it, right? I mean, if everybody is selling, please make sure you buy some, right? Like, and these are blue chips. I mean, TCS, Infosys of the world are blue chips, right? Like, whatever happens, I mean, they will come up. I mean, a lot of things have happened to them. .com bubble has come, COVID has come. Correct. In fact, a lot of phenomena have come which actually threaten their business models, but they are surviving. Right. And this again, I mean, AI play is something that they will survive as well. Is my belief. They may not. Correct. Again, I may be wrong, but if they do, right, there's a lot of money out there for you to make. Absolutely.
Cool. So last few set of questions. One of the biggest investment myth that you've heard of.
I think that you can make 300% money in small caps, right? 300, 400, insane amount of marketing happens around small caps, and so I think most of it is untrue, right? There is a lot of risk, and there is a lot of speculation, right? So the myth is that you don't make that kind of money, right? I mean, maybe your hit rate is 20%, maybe 2 out of 10 do perform like that, where people say it's a multi-bagger and it's whatever baggers they call it. But I mean, it's 2 out of 10, right? Nobody tells you that, right? And then they will put the pictures of their portfolio where they may have.
If you had invested 10 years ago, you'd heard that.
And then they'll pick those two, right? But they'll not show the other 8, right? So the biggest myth is that again, don't look at those videos and invest, right? Like you will lose money for sure, because the whole idea of putting that video is for you to lose money.
True. One word advice for a new investor.
So I think park small amounts, right, and then start small. right? And then I think use your own uh, use your own brain and ask questions if you are hiring an investment advisor, right? Like a lot of people in India think if I have hired an investment advisor, right, it's done and dusted, right? Like I mean, so I think as an investor, we should ask the right questions. Like what is your portfolio? Where are you investing?
Mhm.
What is your philosophy? Right? I mean, when you're sitting across the table, okay, I'm putting my money. Like, understand I may lose, but what are some of the controls you have, right, around that?
Right.
How frequently you look at your portfolio? Right? What is your strategy of diversifying? Right. So I think we need to uh, start asking right questions, right? And then the more again, it's more about education, more about getting informed, more about understanding, right? And it's the ocean, right? Like I mean, nobody can understand everything, right? But at least with whatever limited knowledge you have, at least be certain that okay, this is where I'm putting my money, this is what I'm expecting, this is the goal, right? And this is what I would achieve, right? And there could be a variance, right? But that variance could be 10 to 20%, right?
Right.
I mean, it should not be like I'm investing into something where I'm expecting 300%, but my money just washed out.
Right.
So, and I'm against those speculative kind of investments, because then what happens is that people, when they burn their hands, they don't come back. And I've seen people like who burn a lot of money in
Yeah.
FNOs and others. And then what happens is that they just stay away from the market for a very long time, but they've burned the money. Right?
Yes.
So I think speculation is good for certain people. I don't know. Some people do make money with that. Yeah, but maybe I'm not. And I'm not designed, or maybe my mental makeup is not designed to do that.
Right. Short-term gains or compounding over time or both?
Both, actually both, right? So depending on the opportunity, as I said, right? So there are some plays which are compounding, and there's some plays which are short term. I mean, like, so yeah, I mean, you need to play. It's very, very situational.
Investing in a friend's startup versus investing in an unknown company's IPO.
I think a friend startup would be better.
Okay.
Right? I mean, it's a known friend, it's a trusted friend. A friend means a friend here, I
Yes,
suppose.
yes.
Because I mean, you can be a part of a great journey, and then yeah, in the process you may make money, but you have to do your due diligence, right? I mean, a friend's company doesn't mean like somebody taking money and then wasting on something which you don't like, right? So I mean, again, have a due diligence, make sure you understand where you are putting your money.
Perfect.
Yeah.
Last question. Where do you see peer-to-peer lending headed in the next few years? What is your view of the market, the industry, public sentiment that you have seen so far?
I think with the right controls, it will grow.
Okay.
Right? I think maybe RBI has a big role to play because people trust RBI. Right?
Yes.
So, I mean, if there are right frameworks, if there are right models under which people are benefited and people are making money, there are right processes at a ground level, like for example, your reconciliations, right? Things around your collections, things around how you disperse the money.
Correct.
Are there independent entities who are managing the money? Are there independent entities who are disbursing the money? Right? Are there sufficient controls in place so that, I mean, cheating would be there, everything would be there, but you have right processes to like recovery and
Correct.
stuff like that. So I think the right framework, consistent process, use of a lot of technology, because you cannot have like a building full of people doing collections, right? Like,
Correct.
so I think uh, maybe yeah, right framework, put right controls, have a right framework, and then give suggestions, right? Like I mean, give feedback as a company as well back to your regulator, like your RBI, that okay, this is what we think is beneficial, right? I mean, for the consumer, for the loan, for the company, for the overall model to grow, right? So
Correct.
be a participant to that growth in the right way. When I say right, I mean, see, there are two things, right? You have to make sure that you have to do it right,
Yes.
right? So if you are doing it right with the right intent, then I think it will make sense, right? So if P2P is done with the right intent, right, I think that is what is the best thing to do. But if it's not done with the right intent and it's only done with speculation, only done with, a means to something which is not great, then it will never be scalable.
Correct.
So again, it's a process. Right? People have to trust the product. People have to make sure that they understand the product, they're investing in the product, and then uh, in the end, everybody should be a beneficiary of this whole ecosystem.
Absolutely. And that's the goal and objective that we are here with. And that concludes our today's podcast. Thank you all for joining, and thank you so much, Chef, for joining us here today, sharing all your great insights and suggestions. So yeah, we'll conclude here today, but I'll see you next time in the same podcast. Real people, real stories. Thank you so much for joining.